Turning now quickly just to run through our portfolio. Our two advanced stage projects, KSM and Courageous Lake, both in Canada. Combined, they have 45 million ounces of proven and probable gold reserves and over 10 billion pounds of copper. And then the three earlier stage exploration projects we've acquired since 2016 include Iskut, Snowstorm, and Three Aces. KSM is the project that keeps on giving. We bought this project from Placer Dome in the year 2000. We paid $200,000 to buy KSM. We've now invested over $400 million into the project, defining not only the world's largest undeveloped gold-copper project as measured by gold and copper reserves and resources, but also a project that has tremendous capital efficiency, even at metal prices much lower than they are today. KSM is located in the middle of the Golden Triangle that's now getting a lot of attention, with a lot of majors coming into this area. Recently, we had Newmont step in and buy the GT Gold Company. Newcrest came in a few years ago, buying 70% of the Red Chris mine. And Teck is also a big player with Shaft Creek and Galore Creek in the district. Another great thing that's happened for us is the introduction of new infrastructure that'll lower our cost dramatically. Typically, when you have projects of this scale, you have to bring power in, you have to bring roads in, and you have to find a way to get your product to a smelter on the Pacific Rim. In our case, the government maintains a highway just to the east of KSM. Along that highway, the government has extended the power grid with cheap hydropower. We've now arranged contractual agreements with BC Hydro to buy 250 megawatts of power from this line. The effective cost of power here is about 5 cents US per kilowatt hour, some of the cheapest power in the world. And last but not least, just to the south of us in the town of Stewart, we now have two port facilities, one which was refurbished, and another one that's been built brand new that will provide year-round access to the Pacific Rim to bring supplies in and concentrate out. We are blessed with tremendous amounts of metal at KSM. We have 4 deposits that came along with the acquisition from Placer Dome: Ironcap, Mitchell, Sulphurettes, and Kerr. And then, as Bruce mentioned, in December, we acquired a 5th deposit called Snowfield, which we actually believe is the sheared off top of the Mitchell deposit that was moved up the valley by a fault many, many years ago. Collectively, we have 9.8 billion tons of economic resources that are either confined by open pit shapes or by block cave shapes. As we went through the environmental assessment process and received our approvals in late 2014, we are now permitted for about 2.3 billion tons of tailings. So even though we have 9.8 billion tons of economic resources, what we've been focusing on, what are the most capital efficient mining scenarios that we can put forward? What is the best 2.3 billion tons that we can mine to generate the best returns? We finished a pre-feasibility study in 2012. That study was updated in 2016 and further reconfirmed just last year. That updated study captures just over 38 million ounces of gold in reserves and over 10 billion pounds of copper. And as you can see here on our base case, this project would generate an after-tax cash flow of about $10 billion. And that's using gold at $1,230 an ounce versus $1,900 where it's trading at today, and copper at $275 versus $450 where it's trading today. And as you can see on the slide here, looking at the pre-feasibility mine plan using 1850 gold and 450 copper, we see an increase in the after-tax net cash flow from 10 billion to 30 billion, and significant increases in net present values, internal rates of returns, and improvements in payback periods. As good as that mine plan is, we actually showed a better mine plan in 2020 that started to focus on the discoveries we made at Deep Kerr and Lower Ironcap after the 2012 pre-feasibility study was completed. We were able to show a study that captured 40 million ounces of gold and 19 billion pounds of copper within the 2.3 billion ton limit. And that economic study actually showed zero cash costs, and very low total costs at the gold prices of $1,230 and a copper price of $275. And it's only about to get better. In December, we completed the acquisition of Snowfield from our next door neighbor, Pretium. It's an asset that we've been following and actually been trying to buy now since 2008. The stars finally aligned for us with new management at Pretium willing to come in and do a win-win deal. We paid $100 million to buy this deposit from Pretium. They used the $100 million to pay down corporate debt on the mine they built at Brucejack, and we brought into our portfolio 35 million ounces of gold and 4 billion pounds of copper that were not available to us prior to owning this. We are now in the process of updating our pre-feasibility study to incorporate Snowfield. What we expect to see is a mine plan that can be open pit only for more than 30 years at a strip ratio of less than 1-to-1, capturing nearly 50 million ounces of gold in reserves and keeping the copper content high enough to provide the credits that are necessary. That updated study should be completed in early 2022. And in addition, we expect to see a significant improvement to the project's net present value and IRR, even better than what we were able to show in that mine plan in 2020 that captured the higher grade copper from Iron Cap and Deep Curve.